Hey everybody, this is Will Frazier with Bespoke Real Estate Services, and I wanted to pop in today and talk briefly about the most common questions and misconceptions I hear on lending. So I'm a real estate agent. I do a lot of work with investors, with home buyers and sellers, with tenants and landlords. I am not a mortgage professional, so this would be followed up by specific questions directed to any of the lenders below on any specific questions, or you can reach out to me and I will ask on your behalf whatever's most convenient for you. But I want to hit you with the three most common questions that I hear that embody some misconceptions on lending. And the first is this. Number one, can I buy a home with zero money down? Or can I get a 0% down loan? The fast and simple answer to this question is yes, if you have access to a VA loan. And if you have access to a VA loan, you know you do. And if you don't have access to a VA loan, then by and large, the lowest down payment option for you is going to be an FHA 3.5% down loan. Now, you will occasionally find a 0% down conventional loan offered by credit unions or extremely small banks. And that is all over the spectrum as far as whether that's a good deal or a bad deal. And that's really not beyond the scope of this to deem whether those are good or bad. But by and large, your low down payment option for people that don't have access to a VA loan is going to be the FHA 3.5% down loan. And number two, are interest rates rising? That is also a simple question or a simple answer. That's not so simple. Yes and no. That is a speculative situation. So what people are observing is that the Federal Reserve has decided and declared that they will be reducing subsidies that are suppressing the interest rates. So, housing market collapsed, interest rates bottomed out, credit was drying up. It was just crazy. So the Fed stepped in and said, all right, we're going to regulate it. We're going to provide some stability. And now that we're in a healthy situation, the Fed's saying, okay, we're going to back off our subsidies just a little bit. They did that once last year, and they have 5 scheduled for 2019. So the fear in the market is, oh man, the rates have gone up, and if the Fed's backing off 5 times in 2019, then interest rates will definitely rise. And so there's a kind of a panicked chaos that's happening. And what I can tell you is we can't know that. That is speculation, and logically it makes sense, but the market is the market. So whether the market responds each time next year that the Fed reduces subsidies, just like it did the one time in 2018, yet to be seen. But objectively speaking, we are in historically low interest rates still. We have been for 5 or so years. And even today, November 27th, 2018, historic low rates. And I'm seeing stuff in the 6%, ballpark, historically low rates. So don't speculate so much in real estate when you're looking at buying or selling your personal home, but do be in tune with the factors of the market and make as wise of a decision as you can. Number 3, my friend or I go to church with or my neighbor's a lender, surely I can get a better rate through them, right? They're going to give me the buddy deal. Well, works out about the same about the same as it does when your buddy's a real estate agent. Statistically speaking, and I'll speak real estate in this way to illustrate it. There are 6,000 licensed agents in the Oklahoma City metro, and I'm lumping in some satellite cities around, but 6,000 agents, and 300 of us do 90+% of the work. So do you see a disconnect? 300 out of 6,000. So the other 5,700 live by a lot of people, go to church with and work with, because they're moonlighting, other people. So all those people out there say, oh, my friend or my buddy or my coworker or my neighbor is an agent. My neighbor is a lender with no qualification or with no look at how good of a lender, how skilled of a tactician this person is. And real estate agents, lenders, insurance, unfortunately and fortunately, we kind of get to know you pretty well. We dig into the depths in order to help you accomplish a goal that you are trying to accomplish. So you want a competent person doing that. And the darndest thing is, you don't pay more for that because this is a market commoditized rate. Loans are a market commoditized rate, like it's a commodity. If I want to sell seashells, it really matters whether, there are other seashell vendors and what the going rate for a seashell is, but it matters way more once seashells almost cripple the world's economy and the government steps in and regulates it extremely highly. So your buddy or your neighbor is not truly going to get you a better rate on that loan. They might be able to reduce lender fees, things like that, but ultimately you are going to be better off going with a competent lender over a friend lender. That is a quick look at the 3 most common questions that I hear about loans. And I want to zoom right back in on number 1 to say something. If you use an FHA 3.5% down loan, something to know is that your PMI, which is actually called MIP on FHA loans, will exist throughout the life of the loan. Still, that loan is a 30-year loan if you choose a 30-year FHA loan, and it will be paid off in full in 30 years, but that MIP will stick there for the life of the loan. It doesn't drop off when you hit 78% loan to value ratio like most, if not all, conventional loans do. So that would be something to note with that FHA 3.5% down loan. Thanks for tuning in today. If you have any follow-up questions, feel free to message me or get in touch with any of the lenders that I've listed below. They will competently handle any question you have, no matter where you are. Have a wonderful day.